So maybe if you can start off with a poll, and while we're doing the first poll, we'll just introduce ourselves. Jillian, you want to go first?
Sure. I'm a lawyer, and I'm currently at National Bank, and done a lot of work before that in the Bitcoin cryptocurrency space.
And I'm Laurence Cooke, and I haven't done any work in the cryptocurrency space. I'm the founder and CEO of a company called nanoPay, and we have a digital cash platform, or an e-money platform, that we acquired from the Royal Canadian Mint called MintChip. I think we're good on the first one. Daryl, if we can move on to the second one. Slightly more controversial is the second one.
So what we wanted to talk about today, we were asked to talk about innovation, regulation, and digital currency. And over the course of history, there have been many different forms of payment systems: barter, gold, paper currency, and then charge cards debuted as well. And ever since then, people have been predicting the demise of cash and the emergence of a cashless society, which is a major trend of this conference. We're going to look at the role of digital currency in that cashless society. And we wanted to start by looking at what exactly are we talking about when we say digital currency.
And Jillian actually wrote a book on this, so I don't think there's a better person to tell us what the definitions of digital money, digital cash, and cryptocurrency are.
Thanks, Laurence. First of all, why is it important to look at what is digital currency? Categorizing things and ideas is important because that's how humans like to work, but it also helps our understanding with an applicable legal framework to understand what are the rules that apply. And what we've seen is that digital currency doesn't always fit into our established lexicon and our established paradigm of what we think about when we talk about money or currency. Some regulators and government agencies around the world, not all, have come out with definitions of digital currency. These characterizations, though, really differ depending on what kind of agency you're dealing with. And that's not so abnormal because you see that, for example, like the definition of property could be different in the Income Tax Act versus consumer protection law versus privacy law. It's not so abnormal that that's the case. So when we're talking about digital currency, we're talking about really like two different categories. One is digital representations of fiat-backed, of cash, so of government-backed legal tender. And that is really, I think, Laurence's domain. The other, number two, which is a little stickier, is cryptocurrency. So the definition I find very interesting is that which was issued by in the state of New York's BIT license regulations. And that's that cryptocurrency is any type of digital unit that is used as a medium of exchange or form of digitally stored value that can either have a centralized administrator or a decentralized no administrator, so another option is that it is created or obtained by computing or manufacturing effort. So the reason why it's defined so ambiguously is because we're really in early days here, and there's many different types of cryptocurrency that are being created. So what I just described, those elements really kind of categorize. We're talking about Bitcoin, Litecoin. You may have heard like the word altcoin. So those are the many, many different coins that run on the Bitcoin blockchain, and that include Bitcoin. I'm just going to run through a little bit from the Canada perspective.
Okay.
Okay. So in Canada, by and large, no regulatory authority, with exception, has defined what virtual currency is. The Proceeds of Crime, Money Laundering, Terrorist Financing Act, which imposes anti-money laundering, KYC obligations on multiple different types of industries, including money service businesses. And that, like the definition of money service business was expanded in the 2014 budget to include businesses dealing in virtual currency as defined in the regulations. So those regulations, when they are published, they have not yet been formally put out, will define what virtual currency is. So that's something really interesting to look out for. Otherwise, we don't have a definition of cryptocurrency. And again, I'm really talking not about digital representations of cash. I'm talking about the other, like a Bitcoin, which is not a representation of cash. It is not a claim on the issuer. You would think that the Currency Act is a really good place to look when you want to figure out what money is and whether cryptocurrency fits there. It actually isn't. It doesn't tell us much. The Currency Act just tells us what legal tender is, and that's the money that's issued by the Royal Canadian Mint, and it has to be accepted as a way to satisfy debts if you're in Canada. But what we do know is that money is bigger and broader as a concept than just legal tender. And specific laws do define money, and some of them rely on what in the money philosophy world is called the state theory of money. So that's the idea that money, in order for it to qualify as money, has to be something that's issued by a sovereign or a government. So we have some pretty important commercial legislation. For example, the Personal Property Security Act, that's in different, all the provinces of Canada. And this applies under the UCC in the US too, that defines money as something that is issued as a medium of exchange that's adopted by either the Parliament of Canada or whatever the government is where that legislation is enforced. So that has like really important consequences for the use of cryptocurrency. We can go into that later. That's about it from the Canada perspective.
Yeah, so it's quite different in Europe, and you would think that Europe was all exactly the same, but it's not. So the first thing is Europe does have e-money legislation, and there's an e-money directive, and it's quite widely used. E-money is pretty clearly defined as a prepaid bearer instrument, which does not necessarily involve bank accounts in transactions. Right, so it is a digital representation of fiat currency. The ECB goes on to define the difference between virtual currency by saying virtual currency schemes differ from electronic money schemes insofar as the currency being used as the unit of account has no physical counterpart with legal tender status. The absence of distinct legal framework leads to another important difference as well. So, they're actually recognizing at the ECB level that there isn't a legal framework that is specifically designed for the cryptocurrencies and virtual currencies. And part of the problem here is the domain, because how do you actually try to regulate something that doesn't necessarily start or end in your domain? It could all be entirely outside of your domain. There's a pretty clear legal framework involving lots of different attributes that would be typical of more like bank or payment regulation that exist in the e-money regulation. But then jumping to the cryptocurrency side, it's a real patchwork. So I think the best country, if you're a cryptocurrency company, is probably Luxembourg. They actually said that virtual currencies are money in Luxembourg, almost directly contradicting what the ECB says. And they said that in February 2014. And they said that operators must apply for an FI-like license on a case-by-case basis. And they granted their first license in October 2015. The license application process takes about 6 months, and it does require, quite an onerous set of, it's not a low bar, it's quite a high bar, but it does work, and they've certainly legitimized it. Germany defines it as private money, as does the UK, and it can be used as a unit of account, so you can actually put it in your accounts. And but they've been very clear in Germany that it is not e-money, so that the e-money directive does not apply in Germany.
That's cryptocurrency,
That's
right?
Cryptocurrency.
So if I could just add to that, something really interesting about what Germany's done, because they did come out and say that cryptocurrency is a unit of account
Yep.
is that Canada's Currency Act defines legal tender as being either the money that's issued by the Canadian Mint or something that has been identified as a unit of account by at least 2 countries. So, I mean, this is sort of uncharted territory, but if another country declares that cryptocurrency that is not backed by any issue, that any central government or issuer is a unit of account, we could be giving a very different presentation here.
Yeah, so in theory, you
point.
could set up an entity in Germany and operate in Canada under that as a sub or something. So France, they're really not clear at all. But they do have KYC and AML rules and transaction limits. And interestingly, they've really focused on the wealth tax and capital gains of Bitcoin in particular. So that if you have a whole bunch of holdings in Bitcoin and your value goes up, they want to tax the value increase. Denmark says that their financial services, it's FSA as well, but it's not Financial Services Authority, does not have jurisdiction over virtual currencies. So they just say they're just pretty much ignoring it. Finland came out and said it's VAT exempt, and then stopped at that. So they've done no more than saying that it's VAT exempt, which kind of implies that it's more like a financial instrument, because as we know, transactions are VAT exempt in most countries. Poland says it's not illegal, but it's also not legal tender. Most banks have actually stopped working with cryptocurrencies in Poland. Sweden is actually relatively favorable. Many companies but any company that deals in both fiat currency and cryptocurrency has to apply for a license and provide KYC and AML. So they kind of treat them like a bank if you're doing any of the exchange between fiat and crypto. Switzerland, it's kind of run in an odd way by a council rather than a single person, and the parliament recommended that they investigate it and create some special laws, and the council came back and said, actually everything's okay, it's covered by all of our laws, we don't need to do anything special for virtual currency, it's already covered, they can carry on.
So I would actually by and large agree with Switzerland,
yeah.
And I'll get to that.
Yeah, and then the UK says it's a private currency. In fact, the UK is alarmingly similar to Germany. Private currency, VAT on goods and services, capital gains tax on Bitcoin holdings. So maybe we can have the next polling question, Daryl.
So the reason why we put that question up there is because
when you look at the, I'll just jump into
Sure.
the application of the law to digital currency. So by and large, Bitcoin and cryptocurrency does not exist in a legal vacuum. And if there was like one takeaway from what I have to say today, that would be it. And the reason for that is that Bitcoin and cryptocurrency, at the end of the day, it's a technology. You can't. So is like the wheel, right? You don't regulate the wheel in the same way that you don't regulate Bitcoin. You regulate how people use cryptocurrency. You regulate how people, I guess, use the wheel if you're going to.
The car, yeah.
Within the context of how it's used in a car, and then there are rules that apply to a car. So a really useful way of thinking about it is to take a step back and to look at not the technology itself, but how it's being used. And most of the examples that Laurence just went through of different countries, they actually are not necessarily, they're not new laws, they're just clarifications to existing laws. So the example of like regulating some businesses as like financial, it's not financial institutions, but some sort of like financial entity, that's because the type of activity that they are doing with cryptocurrency, whether it's acting as like a Forex type of exchange or maybe a remittance business or doing trading, resemble the same activities of their fiat counterparts. And so the principle being that if you're engaging in activity that's very similar in terms of behavior, and then you're going to talk about also risk, that you should, the playing level should be fair. So the new guys should be subject to the same rules as the other guys. And the same with tax law as well. The CRA came out and said, and you mentioned this in other countries too, the same idea that you, if you purchase Bitcoin at $300, and for example this week you sell it where it's almost as high as it's been the last 2 years, I think yesterday was at about $1,000 for one Bitcoin, then you can expect to have to pay capital gains on the money that you earn. What I find really interesting is that I think a lot of the reason why there's this confusion as to like cryptocurrency isn't regulated is because of the way regulations in the payment space are designed. And that's largely a result of history and context that businesses in the cryptocurrency space, and I hope you'll talk about your experience in the more like e-money space, but are not captured by traditional payments regulation because the payment regulatory infrastructure is really industry-based, and we have industry self-regulation with government oversight, and the Canadian, the Payments Canada, it's hard with the new name, I always forget it, and Payments Canada that also that is a major player in creating this system of rules that applies to the members, which are banks. And traditionally, this maybe hasn't been such an issue because it's only been banks that were, and the other players in this ecosystem that were building up the payment system in the first place. And so the regulations that developed tended to be more technology specific and specific for the players involved. And so it's hard to look at how, like, cryptocurrency doesn't, like, it's its own payment rails. And you can't shut it down because as long as the internet exists, you'll have Bitcoin and you'll have the Bitcoin blockchain, unless every single person decides to stop using it. So it really exists outside of any regulation and any jurisdiction.
Correct.
And so the way that it should be looked at in terms of regulation is how it's being used. And that's what Finance Canada has done with the anti-money laundering legislation to say, well, if you're like a cryptocurrency business and you're doing a currency exchange and you're engaging in the same kind of activity with the same kind of anti-money laundering risk as traditional players or traditional MSBs, then you got to follow by the same rules. And so it's a really interesting exercise because it forces us to take a step back and abstract, say like, okay, what are you actually doing?
Yeah.
And based on that, what is the applicable law? But it doesn't exist in a legal vacuum. It's not unregulated, but it makes it very hard for new players to kind of establish that because not everyone really understands that.
Yeah, so there are lots of other payments that are effectively unregulated. So Visa and MasterCard are not regulated by any particular government agency that says this. It's more of a code of conduct, and lots of other payments are people signing up to sets of rules and things like that. So it's not necessarily something that comes from the top down like it does in the UK, which I think is the opposite extreme, where the payment systems regulator controls everything in all of the different payments domains. But I think the important thing here is that for a new innovative business, it's really difficult to get legitimacy without some sort of credentials. And a bank today gets legitimacy through a banking license. They get to write the word bank, and related to that, consumers know that there's a whole bunch behind that. You don't get a banking license easily, and therefore they can automatically trust you. So if you've got bank in your name, consumers trust you. So, and consumers do need to be protected, but the vast majority of the consumer protection already exists in the Consumer Protection Acts. But why do businesses need some sort of legitimacy in this? Well, I think there are two parts to it. Firstly, the consumer confidence side of things. And without that consumer confidence, it's difficult to hire employees, to get customers, to really grow your business and do things. And then the other side of it is, in fintech, you actually need to work with banks. And banks don't want to work with you unless they know that you're legitimate. And without any sort of stamp of approval or license or credential, it's difficult for a bank to take on that risk because it's actually unknown risk. They don't know how much risk they're taking on. So try and finance a business that you say is in crypto cash. And if we're talking about Canada, in Canada we're risk averse anyway. So banks are even more risk averse. And guess what? Investors are also more risk averse. So I think the main reason why everyone in fintech says, we need to go outside of Canada to innovate is not because Canadians can't innovate. It's not because we haven't got great customers here. It's not because we can't do any of these things. We can't get people to finance it. We can't get people to finance it because it's risky, and we're naturally more risk averse in Canada. So hiring is difficult. Going to market is difficult. Partnerships are difficult. So I think the biggest impediment to innovation is not regulation itself. In fact, the right regulation and some regulation is actually very useful because it gives you that legitimacy.
I wanted to add another one. I wanted to ask you whether you think this too. I think one of the barriers to fintech and cryptocurrency is being cryptocurrency businesses being able to for consumer adoption and for working with banking partners is also a question of time, right? And because you just mentioned trust, and that's why it makes me think of that, because yes, people have trust in banks, and part of that is because they can rely on the fact that they are regulated and that they have certain licenses, and not just anybody can say that they're a bank. But the other side of this, and I think that this will happen with time, is that trust is not something that you can buy with a license. Trust is earned. Yeah. And that, the big 5 or 6 banks in this country, they've been around for over 100 years. And that's something that trust didn't come overnight. And sometimes that trust has wavered at different financial crises. And so how much do you think that this is also a question of time? And coming with a regulatory stamp of approval and experiences, and how much time do we think it's going to take? An open question. That's not one of our polls. I just thought of it now, but
yeah, I think the thing is that if we don't innovate in Canada, it's not like the rest of the world's going to stand still and wait for us. So what will happen is, if we don't innovate in the whole ecosystem and we don't have partnerships and collaboration between fintech and financial institutions, what we end up with is either the Canadian fintechs move abroad and they partner with banks that are happy to partner, and they do that abroad, and then other countries get the benefit of our innovation. Or worst case scenario, we land up with a whole bunch of banks and fintechs from other countries coming into Canada and eating our lunch, and that could be eating the lunch of both the banks and the fintechs. So I think time is important, and we can't just wait forever to get legitimacy.
Yeah. Do we want to put up? We have a couple other polling questions.
Daryl, can we have the next one?
Did people already answer that one?
Yeah, they started.
Yeah, okay. So maybe you'll set that one up, because I think that was one of your questions.
Yeah, so I think we mentioned already. So let's just assume that we are going to have some sort of regulation in this domain. How should we do it? Should we have a regulator like they have in the UK that does everything? And the UK regulator does regulate Visa and MasterCard, and it does regulate the faster payments platform. So whereas that doesn't happen in a lot of other domains. So they do have teeth. They're actually a part of the FCA, and one of the papers that they came out with in February, which is a preliminary paper, said that they didn't think that the banks should own VocaLink. And the question that they are now asking is, should they have to disinvest from VocaLink because VocaLink controls the platform? Now, that's a preliminary paper, and that could easily change. And I guess the process in the UK is they make recommendations, and then the Competition Bureau or the equivalent thereof will be assessing whether or not that is the right way forward. But I think the very fact that they even brought up things like that. Now, the Payment System Authority in the UK has 3 specific mandates. One is to increase competition. So they say, for example, that they've got faster payments, but one faster payments rail is not actually enough, and they want to disaggregate and disintermediate the industry so that no players work at multiple different levels within the value chain. And they are actively promoting innovation by saying that banks have to give access to all of their credentials and their accounts. And if you think about wireless number portability, and you can move your phone from one telco to another, they want to achieve the same thing in Europe, where you can take your bank account with all of its transactions and move it from one bank to another, and that should be a few minutes effort.
So to add to that, actually, I know that there's been some recent legislation, I don't know if it's enacted yet or not, but in Europe that establishes that ownership of consumer data is actually owned by the consumer. So that would militate towards the trend that you're discussing.
Yeah.
So like if you're a consumer and you own your data and you have it, then it does make it easier to transfer all of that information and deal with whatever other financial institutions you want, or fintechs, or so like let's say you have your main bank and you do all your banking with them, but you want to do some sort of peer-to-peer lending as an investment experiment. You have all of that data. Like I'm going like into territory that I don't know too much about, but I just found it very interesting, this concept of who owns your data in the banking world, and that could be an important tool for enabling consumers to make choices in seeking other financial service providers. And then about this question, actually,
Yep.
I don't know the answer to this question. I think it's really complicated, and there's a lot of aspects that, many pros and cons to all of them. And so if I could just, so when it comes, like the question of a new payments regulator, not the first time that question's been asked, and I've read some very interesting literature about this idea, and about basically that a regulator or laws, like general legal principles that apply, again, like activities-based, and that come from legislators, so from the federal government. And one of the challenges to that actually is a constitutional base, that it's not actually really clear that the federal government has the jurisdiction to enact that type of legislation. That would be one aspect. And then again, with the remain unregulated, with that option, which is only getting 6% of the vote, but maybe I could give you a little bit of context to that. The other side of that is to be too quick to regulate, and that maybe we should wait and see. And I know that there's major consequences for business because we want some regulation to legitimize business, and I agree with that. But another, at the expense though of potentially over-regulating, and we don't know the full implications of not just cryptocurrency, but like the underlying technology. Like the answer to every question is blockchain these days. So, and we don't know all the implications of that, and it would be a shame to impose unnecessary burdens that would delay or prevent the technology from being fully utilized. So that I see as like a major concern of like over-regulation. And I know like the bit license in New York State has been very heavily criticized as being an example. So the bit license in New York essentially created a licensing process for businesses that are engaged in activities with digital currency, but the range of activities is criticized by some as being very, very broad. And being a barrier to entry because it's very expensive to undergo that process. So like the lean, mean startup fintech can't necessarily enter into that market. But then the other side is, well, then risk-based, like maybe we don't want the very bootstrapped fintech to be handling people's money. Like these are all, I don't have the answers here, but these are all different dimensions of
and in a perfect world, you can do it at an activity level and based on risk. But as Jillian said, we have a problem between the federal and the provincial legislation in trying to do anything that's just specifically activity based.
Do we want to ask some questions? Because
Yeah,
I think,
so we move on to the next. If you
also
have any questions, jump in. But can we have the next one, please, Daryl? Sorry, go ahead.
No, I think that was one of yours, but I'd like to, just if anybody has questions, just feel free to ask them.
So this.
We got a question.
Go ahead, Anne.
I'd be interested in, Laurence, your comments about regulation being an opportunity for legitimizing the new players, and then Jillian, you articulated the contrast of the challenges of trying to regulate something new. What do you think the new regulation? What's the environment that would make it easier for fintechs to become more legitimate?
Oh, the sandbox.
And how would you answer that?
Go for it.
Yeah, so maybe this is a good opportunity for you to talk about the sandbox in the UK.
Yeah, but I'll let you join in. So some financial authorities in different countries have been creating what's called sandboxes. So in the UK, the UK Financial Conduct Authority has created, like they're accepting applications for fintechs to, I guess, like play in this regulatory sandbox. So what that means is that it's a safe space where businesses can test innovative products, business models, delivery mechanisms, and ensure, like in very close proximity to regulators and experts and in the field and in the industry, to make sure that consumers are properly protected. And it also includes like a tailored authorization process for the selected firms that are for authorization for whatever licenses that they may require. So that's a really interesting model. And actually in the last few weeks, there's been 3 other announcements, one in Australia, Singapore, Abu Dhabi, about looking at whether they haven't necessarily implemented these sandboxes, but looking at the idea. And I think that's a really interesting way to potentially like legitimize, because it says to the rest of the industry, hey, like we want these guys, we think that these businesses add value and robustness to our industry, and we're willing to take the time to make sure that whatever regulation is imposed is valid. But like even like creating a sandbox, I think is a really good step towards legitimacy.
Yeah, and if we step back and we think about what we're trying to achieve, the first thing we're trying to achieve is we're trying to protect the consumers. We don't want Ponzi schemes. We don't schemes collapsing and running away with consumers' money. So I think we can do a lot of those protections, and we can have some sort of health warning when you join a sandbox-based entity, so that consumers go in with their eyes open. And then I think the second thing is related to things like systemic risk. And to be honest, I don't think that there is a single fintech company or Bitcoin company that could pose any systemic risk at a national level to Canada in the foreseeable future. And that's more than 10 years away at least, I think. So I don't think that there's anything that we need to panic about on the systemic risk side. And we often get into we really get our knickers in the knot about quite small things. So I think a regulatory sandbox would allow you some degrees of freedom to try some innovation, and then you can build the regulations around the things that are grown rather than afterwards or rather than before, because doing it in absence of what the environment's going to look like is also difficult. Sorry, Daryl, can we have the next one?
Yeah.
Sorry, go ahead.
Yeah, just like another major issue when it comes to legitimacy in fintechs derives from anti-money laundering legislation, because there's a lot of liability on the players that are subject to anti-money laundering legislation. The stakes are pretty high, and this isn't new with cryptocurrency. Like this issue pre-existed when it comes to like money service businesses in general, like in the remittance industry. This is a real sticking point for being able to establish those banking relationships. And again, I guess this is a session where I don't have a lot of answers, but I have a lot of questions. I can find identifying the sticking points, but it's not an easy problem. If it was, it would be solved. So that's another.
And then so we've only got a few more minutes left, so maybe we can move on to innovation in general. So the next polling question, please, Daryl.
I'll let you go through some of those because.
Yeah, and then the next one as well, please. So I think in general in innovation, I think you could go on the one extreme and just say we're going to build no regulation whatsoever. I think we have already discussed that. I think that's actually a poor scenario, having nothing, because you don't get the legitimacy in the beginning. The Senate came out with a report saying that virtual currencies should be regulatory light, and that you should focus on the on and off ramps. And while I don't think it was a particularly well-written report and had terrible examples of use cases of cryptocurrencies, I do think that there was something sensible in it. And I think the most sensible part of it was regulatory right. And rather than trying to place huge burdens of KYC and AML on small innovative entities, if you do that at the on and off ramps, I think you've solved the problem. And then, if necessary, you can limit the volume and the values that are going through. I think on the innovation side, there's also a lot of opportunity to do accelerators and hubs and that sort of thing. I think the key thing to do accelerators and hubs is actually access to the banks, because you cannot be successful in fintech without having some sort of access to the banks. So, and I think the one extreme of that is banks with venture capital. I don't know, maybe someone correct me, but I don't know of any VCs in Canadian banks. But Bank of Santander, BBVA have had lots of success in this space, as have Citibank. And Citibank, I think, have now made 65 investments in fintech. Which is pretty appealing. And all three of these banks are only investing in things that they think can complement and improve their bank. They're not randomly going out there and saying, that's an interesting business, I'm going to get into Uber. They're going after things that are going to be complementary to their banking services and improve their customers' experience and banking in general.
So something to add on to that, actually, when you discuss innovation and VC from Canadian banks, is that important to remember is the Bank Act. So the Bank Act has some pretty stringent rules on how a bank as a business conducts its business and how it invests. And something that's interesting to look out for is that the Bank Act is, in 2017, will be, there's a sunset clause, so every couple of years it's reviewed. And so this is an opportunity to look at how banks could more easily work with fintechs and undertake investing, but the current regime applicable to banks may be a little bit preventative in that regard. So that's something to look out for.
Yeah, and then when we look at it at a Canadian payments level, Payments Canada, I think I see the payments infrastructure that they have as the backbone of payments and the backbone of commerce, and that's akin to the backbone of the internet. And the backbone of the internet in Canada is provided by Bell and Telus, and they effectively do that for free, and they provide it to anyone who wants to hook up and become an internet service provider. And indeed, globally, it's provided free by all of the telecoms companies. And just like we need that telecom infrastructure, both voice and internet, to be able to compete globally, I think we need a solid payments infrastructure to be able to compete globally. And I think this is the number one thing to invest in if we really want to compete on a global stage. And I think right now our overall strategy as a country is fast follower, and I personally don't think fast follower is good enough. There are 30 countries around the world, including, we heard, South Africa, unbelievable, my home country, has actually innovated ahead of us. And it's extraordinary that we let lots of third world, Brazil, I'm going to Brazil this week as well, and Brazil have already implemented a faster, better, newer core. So, I think for us to be able to compete globally, in an increasingly world that is globalizing, we need to have a state-of-the-art infrastructure that will allow innovation on top of it. So, I think Canadians like to make the playoffs, don't necessarily like to win, all right? Hence, we've seen that in our hockey and recently in some other sports. But I think this is one space that we really should go for it. We really should try and win. We really should have the best infrastructure in the world.
Can we go to another, if there's any other?
There are two more, but I think we should skip the next one and go right to the last one.
I want to know what people think about Bitcoin, so I want to get to the next one.
the last one, yeah.
Do we have any other, is that, okay, so maybe it didn't make it to the polling questions. Is that that's the last one?
There's one more after that.
Oh.
That's
Are there any other questions? Because I think we're basically out of time, but no, I guess it's not there anyways. Oh, one more question. Yeah.
We talked about the favorable environment for innovation for fintechs. And you touched on a very important aspect of access to banking services for fintechs. And 2 weeks ago, we spoke with some of the executives from Ethereum, which is like a more or less
Yeah.
fintech participant. And they mentioned that they basically had to launch a lot of their operations in Europe just because
Yeah.
they were not able to get access to bank accounts here.
Yeah.
And they're a well-known company. So it seems that there's a lot of, and they mentioned that just because they had
The name Bitcoin.
blockchain,
Yeah.
Bitcoin in their operation, banks are not allowing them access. So what would be like, and you mentioned probably an option that we provide like a licensing that can provide that certainty to the whole ecosystem, that there's a certain level of compliance with all regulation.
Yeah.
The fintechs won't be able to just start operations for basic activities as just paying to suppliers or the
Yeah, so I think if everyone heard the question, it's about licensing basically, and should we license to facilitate virtual currencies and cryptocurrencies? And I think there's two parts to it. I think a license is valuable if it's not onerous and overkill, because it does give you that legitimacy. But I think more important is clarification, allowing the banks to actually bank these companies and collaborate with them. And I guess that could come from the Bank of Canada, that could come from OSFI, but to give the banks degrees of freedom and comfort that they're not going to get a big slap on the wrist by playing nicely with these companies and encouraging innovation. I do think that the announcement that's being made by the Bank of Canada today regarding a future possibility of using blockchain to replace LVTS is highly attractive, and that goes a long way to actually legitimizing the applications of the technology. And a lot of the banks were involved in that. So I think it'd be pretty easy to argue that if the banks can participate with the central bank in trialing something that is blockchain based, why shouldn't they work with other blockchain companies?
Yeah, I mean, I would hope. I think that's like. That's one piece of the pie. That would be great if that was it. But I've worked on both sides. So before I joined the bank, I worked with digital currency businesses, and I understand the risks on both. Like I get both sides of the coin. Like there are risks. Particularly from I see we're out of time, but particularly on the anti-money laundering side of things. And I think that you're like absolutely right. The work of banks with blockchain is a great initiative. I think again, the type of business though is maybe it will be more narrow, the types of businesses that are difficult to bank, and more businesses in the blockchain space will be able to work with banks than before. I don't think it's going to change overnight.
It won't change overnight.
But I think it is changing.
But we've got a huge opportunity if we can actually invigorate this space. We can be a fintech hub. We can be the place that cryptocurrency currency companies want to come to. We actually want those companies to come to us because we create an environment where there's innovation and they can work with us.
Right.
So I think if we do the next right step, if we do the next steps in the right way, we can actually have a net inflow of innovation rather than a net outflow of innovation. And I think there's a huge opportunity for that right now.
So I think we're out of time, but thanks very much.
Yeah, thank you very much for your time.
Thank you for coming to listen to us.